Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we're going to start off by talking about some macroeconomic stock market news, and we're going to be going over why inflation rates are still increasing, why interest rates are trying to get inflation under control, and how this is negatively impacting the overall stock market by bringing the stock prices down of a multitude of companies, which would include MasterCard, Affirm, Sofi, and many others. Then we're going to dive deeper into Sofi Technologies specifically, and we're going to talk about why everyone is talking about Sofi stock, if it's still a good buying opportunity right now, its latest news updates, and whether or not we should still view this company as a good buying opportunity. Then after that, we're going to talk about Palantir's pltr stock, and we are actually going to briefly compare Palantir to Google, Amazon, and Microsoft, and how Palantir actually has an edge up on these other companies, to where in AI technology, Palantir is ranked and rated better compared to Google, Microsoft, as well as Amazon, which is absolutely insane. After we go over that news and their latest price targets, we're also going to go over their newest news updates regarding certain contract extensions that I alluded to in the last video that we did on Palantir. So if you want more videos like this one on the overall macroeconomic environment and how it's negatively impacting the overall stock market and what we could anticipate from the future growth for the stock market, or if you want more videos on Sofi Technologies' SOFI stock or Palantir's pltr stock, remember to go and please smash that like button right now. It helps me out a ton. Go subscribe for more videos just like this one, and without further ado, let's jump into our analysis. So first, we're going to talk about the macroeconomic environment and how it's causing stock prices to crash. The main reason for this is because of inflation. Inflation is extremely high according to the Consumer Price Index, which tells us what products and materials are actually increasing in prices due to inflationary pressure, which is very bad because when inflation is not in control, which is basically when it's either below 2% or above 2%, because 2% is the sweet spot, then investors should get worried. And right now, inflation is around 8%, which is absolutely crazy. So to offset this inflation, the Federal Reserve, who's in charge of actually trying to keep inflation in the sweet spot, and they also have many other monetary duties just to keep the economy running, I think they are doing a good job because by increasing interest rates, it's going to get inflation under control. However, in the meantime, that's going to negatively affect the overall stock market, and it could cause us to go into a very negative recession. If you have looked at the stock market recently, you would know that it is extremely red right now. And if you didn't know, recently, the Federal Reserve had a meeting in September, very recently, where they delivered another large rate hike in terms of the prime rates for overall interest rates. And this is going to affect the market very negatively. Even though it could be somewhat beneficial for financial companies, it's going to be negative for growth companies or technology companies, to where investors are going to start liquidating these types of assets and investing into much safer assets such as bonds or even value stocks, or just keep cash because we don't know how low the stock market is actually going to dip down. This is why very large companies and some smaller companies such as Affirm and Sofi, where Affirm is a buy now and pay later company, Sofi is a fintech company, and even larger companies like MasterCard are all being affected very negatively due to the current macroeconomic environment, especially after the Fed increased their overall interest rate as the prime rate by 0.75%, which is a huge rate hike, and the market isn't really taking to it very positively, at least right now, even though the market actually expected this to happen. So now we know some news regarding why the stock market is falling. Let's see some projections about what's in store for the future. Is the stock market going to continuously fall, or is it going to rebound soon? Well, luckily, we have a quote from the chairman of the Federal Reserve Board, who is Jerome Powell, who says this, and I quote, "No one knows whether this process will lead to a recession or so how significant that recession would be." He goes on to say, "That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and also if we get more labor supply," end quote. So he's saying that we really don't know what's going to happen after these rate hikes, but the Federal Reserve, they're literally in charge for inflation not becoming out of control, and they also want to make sure that the economy is recovering properly. Also, the Federal Reserve gave us future projections and updates about where they want the median future rate hike and prime rate to be. So So right now, the federal funds rate is around 3 to 3.25%. However, at the end of the year, the Federal Reserve is aiming at a federal funds rate of 4.4%, which means we could at least get another rate hike of 0.75%, which is going to cause the overall economy and the stock market to dip even further. So if you have cash on the sideline, you might want to wait until that rate hike comes before you do anything. And this clearly has been negatively affecting a plethora of various companies. Overall, the outlook continues to be murky for the overall economy. No one really knows the future, but we do know that if inflation doesn't get under control, it's going to be bad for the economy. And we know that if the Fed raises interest rates too quickly, it could cause a very negative recession. In the near term, it's really unclear what's going to happen, but over the long term, this author even highlights that MasterCard and Sofi Technologies seem to be fantastic investments, especially Sofi Technologies, because even if we do go into a recession and the stock market crashes, Sofi Technologies has such a great advantage over their competition and other fintechs and banks because they tend to attract young high earners who make well over $150,000 per year, who have FICO scores above 800. So even if the economy crashes, we go into a recession, and the stock market absolutely implodes, Sofi Technologies fundamentally will still be fine because these high earners are still going to be making loads of money, which means they are not high risk at defaulting on their overall loans. And this means that Sofi is a very resilient company overall. And that's one of the reasons why everyone is talking about Sofi Technologies right now. And they've also made, I'm going to say, 3 acquisitions. Even though this particular author in this article only highlights 2 acquisitions, I would say Sofi Technologies has a huge competitive advantage in terms of 3 acquisitions. The first one is going to be their Galileo platform that they acquired back in 2020, and their Technisys platform. These are both absolutely fantastic technology platforms that will not only lower the overall expenses for running a company or running these platforms, but they're also going to bring in loads of revenue. For instance, Galileo saw an increase in a surge of 85% in terms of their revenue by attracting even more customers and opening more accounts, where their overall number of accounts increased by 48% year over year to 117 million, which is absolutely insane. Apart from these very strategic technology acquisitions, Sofi Technologies also has a huge competitive advantage over other fintech companies because they have their own bank charter due to them acquiring Golden Pacific Bancorp, which is extremely innovative of them. So does this mean that Sofi is still a good buying opportunity right now? Well, I would say, considering the current macroeconomic environment, this is a good holding opportunity, but I think the long term is most certainly intact for this overall company. For instance, it added almost 500,000 members in the second quarter alone, to where now Sofi has a customer base of 4.3 million, which is an increase of 69% year over year. So they are rapidly expanding. They also issued out 702,000 new products each quarter by bringing in these new members and also cross-selling and upselling to existing members and new members, which is going to increase their overall revenues thanks to their amazing business model. Also, I want to say that these products that they are upselling and cross-selling to customers have increased 79% year over year, which is absolutely insane. They're also making huge strides in terms of their net loss, to where they had a net loss of $165 million for the second quarter of 2021, but for 2022, they only had a net loss of $96 million, which just shows us that they have a very good trajectory and they are gradually moving toward profitability, which I believe they will achieve profitability towards the end of 2024, which means we would probably want to acquire shares now before the company becomes profitable, because that's when the share price would probably explode, or at least surge a considerable amount. I also want to highlight 3 accounting ratios so we can properly value this company. In terms of their PE ratio, which is their price to earnings ratio, we want this number to be relatively low. Most likely below 15 to 12 is going to be ideal, but the lower the better. And right now they have a PE ratio of 10, which is definitely reasonable. For their price to to sales ratio, this is another metric that we would want to be very low, and it is rather low, especially for a growth company, coming in at only 4.6, so that's absolutely amazing. And because they're a bank, we want their price to book ratio to be around a 1, and currently their price to book ratio is a 1.1. So again, this is good news. We get from these accounting ratios and their overall growth trajectory that this marks SoFi as a very good long potential hold. But now let's jump over to another company that's extremely innovative as well, and that is Palantir Technologies and their PLTR stock. If you didn't know, and if I haven't mentioned already, Sofi Technologies is a fintech company that offers an all-in-one inclusive app to their consumers who need access to financial products and services, while Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. And Palantir is mainly known for crunching and mining data and then giving their results to the leaders of these companies so they can make data-driven decisions. Right now, the PLTR stock trades for $7.24 per share, and analysts believe the company's worth anywhere between $6 and $20 right now. Now, what's really good about Palantir Technologies is that they were recently ranked as the #1 artificial intelligence software platform in 2021, and I just did a video on this in our last video where I talked about Palantir and Sofi Technologies. But what other companies were in the running for this? Well, let's just name a few. IBM, the International Business Machine, Microsoft, Amazon Web Services, and Alphabet. These are mega cap companies. These are giant companies, and Palantir outranked them in terms of their very innovative and technologically advanced artificial intelligence and AI technology, which is absolutely amazing. This just shows the true value of what type of company Palantir could make itself within the next 5 to 10 years, which would be the long term in my personal opinion. We also have the company expanding their partnership with other companies that they have already had a networking or an agreement or a contract with. I did a video a while ago on South Korea's Hyundai Heavy Industries Group, and they are using Palantir's Foundry platform, and recently Palantir announced an expansion of this relationship with Hyundai Heavy Industries Group, which has multiple subsidiaries that we will talk about because this is an absolutely giant conglomerate type of company. Now Palantir will be utilized throughout their various subsidiaries, such as Korea Shipbuilding and Offshore Engineering and many others, which will start using Palantir's Foundry platform. The teams across these shipbuilding subsidiaries will use Foundry, which is Palantir's platform, to make data-driven decisions to make the company overall safer to work for employees, and it's going to increase their operational efficiency. Overall, this expansion in their contract is valued at around $20 million over the next 5 years. And because they already understand how Foundry works, clearly they are enjoying their current relationship and using Palantir's Foundry platform, which is why they are extending that relationship. The CDO of Hyundai Heavy Industries Group said this, and I quote, "We will change the way we work by working with Palantir Technologies. We aim to enhance the competitiveness of our group by setting up an environment where we can make data-based decisions." And in response, the CEO, co-founder of Palantir Technologies, said that Hyundai Heavy is an industrial leader working at the leading edge of some of the most complex engineering challenges that we collectively face. He goes on to say, "We could not be more enthusiastic about expanding our partnership and are actively working to extend access to our software across Hyundai Heavy's operations, as well as the country's commercial and government sector." So overall, this is very positive news for Palantir Technologies, not only outclassing very large cap companies and innovative companies that are working on AI technologies such as Microsoft, IBM, Amazon, and Alphabet, which is the parent company to Google, but we also see them continuously expanding their relationships with companies that they already have contracts with and agreements alongside. So overall, this is very positive news for SoFi as well as Palantir Technologies, but in the meantime, remember to keep some cash on the sideline, or I would recommend to constantly invest into the market regardless about what it's doing, because that's what I do. I'm not into timing the market. I want to consistently invest. Whether or not the stock market goes up or down doesn't concern me because I know over the long term it trends upwards. So I would love to hear your thoughts down below. Remember to go and smash that like button right now. Comment your thoughts down below. Subscribe if you are new. It helps me out a lot, and I will see you in the next YT video.